In this video, we're going to talk about Cardano and give some predictions for the future. Disclaimer. Also, if you want to have a lifetime 10% discount on all commission fees on Binance, then click on the link in the description. First, I want to quickly run through what this project is about and refresh our brains. Cardano is home to the ADA cryptocurrency, which can be used to send and receive digital funds. This digital cash represents the future of money, making possible fast direct transfers that are guaranteed to be secure through the use of cryptography. One of the most interesting projects to have come out is Cardano. Similar to Ethereum, Cardano is a smart contract platform. However, Cardano offers scalability and security through layered architecture. Cardano's approach is unique in the space itself since it is built on scientific philosophy and peer-reviewed academic research. In this guide, we're going to do a detailed study on Cardano and check out some of the more interesting innovations that brings it to the table. The origins of Cardano. Cardano was conceptualized by Charles Hoskinson, who happens to be one of the co-founders of Ethereum. While Ethereum does an admirable job as a smart contract platform, according to Hoskinson, it is a second-generation blockchain, more on this later, and needed evolution. What makes Cardano extremely remarkable is its sheer amount of care that goes into its upkeep. There are 3 organizations which work full-time to develop and take care of Cardano. They are the Cardano Foundation, IOHK, and Emergo. In 2015, along with Jeremy Wood, Hoskinson founded IOHK, Input Output Hong Kong. IOHK is a research and development company committed to using the peer-to-peer innovations of blockchain to build accessible financial services for all. They've been contracted to build, design, and maintain Cardano until 2020. Finally, we have Emergo. Emergo is a Japanese company that develops, supports, and incubates commercial ventures who want to revolutionize their industries using blockchain technology. Much of IOHK's funding comes from a 5-year contract with Emergo. These 3 organizations work in synergy to make sure that the Cardano development is going on a good pace. So now you're probably thinking as to why Cardano was required in the first place. Cardano describes itself as a 3rd-generation blockchain. Let's see what that means. The 3 generations of blockchain. According to Charles Hoskinson, we have gone through 3 generations of blockchains. Generation 1, Bitcoin and money transfer. Bitcoin was created because everyone was asking the same questions. Will it be possible to create a form of money that can be transferred between 2 people without any middleman? Will it be possible to create decentralized money which can function on something like the blockchain? Satoshi Nakamoto answered these questions when he created Bitcoin. We finally had a decentralized monetary system which can transfer money from one person to another. However, there was a problem with Bitcoin, which is a problem with all first-generation blockchains. They only allowed for monetary transactions. There was no way to add conditions to those transactions. Alice can send Bob 5 Bitcoin, but she can't impose conditions on those transactions. For example, she couldn't tell Bob that he will get the money only if he performs certain tasks. These conditions would need extremely complicated scripting, something that was required to make the process more seamless. Generation 2, Ethereum and smart contracts. And that something was a smart contract. So what is a smart contract? Smart contracts help you exchange money, properties, shares, or anything of value in a transparent, conflict-free way while avoiding the services of a middleman. Vitalik Buterin's Ethereum is easily the stalwart of this generation. They showed the world how the blockchain can evolve from a simple payment mechanism to something far more meaningful and powerful. However, this generation had some problems too. As more and more interesting use cases of the blockchain were coming out, they were getting more and more acceptance. The problem was, though, these generations of blockchain didn't really have good provisions for scalability. Along with that, the governance system of these blockchains were not really well thought out. Case in point, the Ethereum and Ethereum Classic split, according to Hoskinson, is a classic example, no pun intended, of bad governance. This is where the 3rd generation comes in. Generation 3, Cardano. Hoskinson knew that the blockchain would need to evolve even more. He took the positive elements from the first 2 generations of blockchain and added some elements of his own. What came out from that was Cardano. The 3 elements that Cardano wanted to solve were scalability, interoperability, and sustainability. As mentioned before, Cardano is unique in the sense that it is built on scientific philosophy and peer-reviewed academic research. All the engineering that goes into it has the ultimate goal of being high-assurance code. This is done to make sure that there is much higher belief in the quality of the code used. More on this later while in the Haskell and Plutus section. This, according to Hoskinson, will prevent future cases like the Ethereum ETC split from happening. The problem with proof of work. As it turns out, there are quite a few problems with proof of work. First and foremost, proof of work is an extremely inefficient process because of the sheer amount of power and energy that it eats up. People and organizations can afford faster and more powerful ASICs usually have a better chance of mining than others. As a result of this, Bitcoin isn't as decentralized as it wants to be. Let's check the hash rate distribution graph. As you can see, 75% of the hash rate is divided among 5 mining pools alone. Theoretically speaking, these big mining pools can simply team up with each other and launch a 51% on the Bitcoin network. To solve these problems, Ethereum looked to proof of stake as a solution. What is proof of stake? Proof of stake will make the entire mining process virtual and replace miners with validators. This is how the process will work. The validators will have to lock up some of their own coins as stake. After that, they'll start validating the blocks. Meaning, when they discover a block which they think can be added to the chain, they will validate it by placing a bet on it. If the block gets appended, then validators will get a reward proportionate to their bets. By the way, recently, or to be more precise yesterday, we published very optimistic news about this project. Cardano gets a significant boost after Shopify and WooCommerce integration. Cardano has received a significant boost after being adopted for payment solutions. Merchants on Shopify and WooCommerce can now use the 6th largest crypto for trading services. A new integration by Cardano has pushed this crypto a step closer to being adopted for mainstream use. The 6th largest cryptocurrency is partnered with Now Payments for a plugin, which will enable merchants on Shopify and WooCommerce to access Cardano. This will enable merchants from the 2 stores to accept payments in Cardano. Now Payments support for crypto. Now Payments has made it possible for their users to gain access and derive value from their crypto holdings. The payment platform has made this possible by integrating more than 50 crypto coins into their systems. According to the company's website, they make it possible for merchants to receive payments in over 50 cryptocurrencies. The platform has already integrated their largest cryptocurrencies, including Bitcoin, Ethereum, and Binance Coin. The newly launched capability of using Cardano will enable users to send Cardano coins to the wallets of merchants directly. Besides, merchants who don't have crypto wallets will still be able to accept payments. They will enable this automatically by converting the coins to the preferred currency. Now Payments also added that they were looking into a new partnership with Etsy. This partnership will enable buyers and sellers in the platform to make and accept payments in Cardano. Etsy is one of the most prominent online marketplaces. Growing crypto adoption. Cryptocurrencies are no longer foreign, given that many people have become interested in investing and using these digital assets. Mainstream payment platforms have started to adopt cryptocurrencies in their platforms to increase their users' exposure to them. PayPal and Visa recently integrated Bitcoin as a payment method for their users. Besides, users are becoming more willing to derive value from Bitcoin and other cryptocurrencies. Because of growing acceptance, crypto is no longer just being held for speculation purposes. Holders can now use their wallets to purchase various goods and services from merchants who have integrated crypto payment services into their systems. Because of the rate at which crypto is being adopted as a medium of exchange, its value also has increased. Bitcoin's value, for example, has grown by over 500%. Besides, the crypto market reached a market cap of above $2 trillion for the first time this year. This growth is being attributed to the rate at which more people are willing to accept cryptocurrencies. Alright, so now let's get to that price prediction. Cardano's price anticipates a blast off from the lower range as indecisiveness becomes a new trend. While optimistic, the upward move will arrive after the immediate resistance is broken. Cardano's price eyes 20% advance. Cardano's price set up a higher high at $1.48 on February 27th after surging nearly 63%. This bullish move was met with profit-booking investors that shifted ADA to $1.15 the next day, creating the lower range. Since February 28th, the so-called Ethereum killer has maintained its price movement within the range, albeit deviating from it at times. Now Cardano's price has once again extended below the lower bounds and is eyeing a reversal. While bullish, ADA needs to slice through the immediate supply zone that ranges from $1.18 to $1.23. A decisive close above this obstacle will signal a potential spike to $1.48. This 20% upswing to $1.48 might be cut short by the 50% Fibonacci retracement level at $1.32. Hence, a secondary confirmation will arrive once ADA conquers the level mentioned above. While the bullish thesis hangs in the balance that ADA will repeat its past moves, it might not. If buyers fail to breach the resistance zone, a 10% correction at $1.02 might ensue. A breakdown at this level will invalidate the positive outlook and kickstart a bearish one. In this case, Cardano's price might crash another 12% to 90 cents, lows seen during the recent flash crash. And where can you buy Cardano? Well, you can buy it on Binance.com, and if you want to have a lifetime 10% discount on all trading fees on Binance, then click in the link in the description. But no, I'm not forcing you to invest in this project. It's 100% your personal decision. Don't forget to check out our other videos on this channel. Thanks for watching.